Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update on the portfolio. We're going to show you track your dividends, update that. Share site is, of course, already updated, but we'll show you the performance of that. And you're gonna see an example of what dollar cost averaging can absolutely do for your portfolio, and maybe talk a little bit about the new news that has come up with mortgage fraud that is happening, which I think just blows my mind in a lot of ways. Because if you probably shouldn't be doing that, period. So yeah, if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here at the end of the week here, portfolio closing out at $13,451.71. We're down $5.20 for the day, which is, pretty good for what we've been through for quite some time. We're down 0.04% for the day. For the 1 week, down $92.22, down 0.68%. For the 1 month, down $556.94, down 3.96%. For the 3 months, down $392.69, down 2.83%. For the 1 year, down $717.24, down 5.04% for the year. And for the all-time since starting this portfolio, we're up $369.04, up 2.81%. So the buys we made this week, as you can see, there's only $23.67 left in the cash account, but we made 2 purchases. Of course, every single week we purchase the Vanguard S&P 500 Index ETF. Ticker symbol is VFV, closing out at $88.41 Canadian, down $1.15, down 1.28% for the past day. As you can see here, we didn't just make one purchase because we did do our fractional buy, of course, every single week, and that got us 0.282 of a share at $88.64 roughly. And then we purchased a full share of VFV, which is the first time I've done that since starting this portfolio. Usually it's just a fractional buy, but we're going to beef up this position a little bit here. And so we got 1 share at $89.29. So there are 2 different prices that I bought at. A fractional share at $88.64, which was later in the day, and then a full share earlier in the morning at $89.29. So we'll head over to trackyourdividends.com and I'll show you guys the power of dollar cost averaging. So before we do that, you can see the portfolio yield. If you were to build the portfolio without the updated position, you would have a 4.29% yield on your portfolio. And if you don't know what yield is, it's the percentage of profits that you would get based on the price of the stock, and that's a dividend paid out to you. And our yield on cost is 4.4%, which is slightly higher due to the strategy of dollar cost averaging, which I talked about in my last video about the power and the secret, not the power, but the secret to my investing, which is dollar cost averaging. And the annual income, as you can see here, is $568. So let's take a look at VFV, which is at the bottom here. You can see that we have 10.5 shares roughly. The price for today was $88.41. There's a change of $1.15. Our average cost is $94.59. We're down about $65.40 on the day. Dividend yield for anyone who's buying it today is 1.33%, and ours is 1.24%. And that gives us an annual income of $12.44, of course, divided quarterly. So we'll go ahead and enter the position. So we'll enter the fractional buy here. Actually, before we do that, just remember the dollar cost average here. The average cost is $94.59. So when you dollar cost average in, you are buying whether the position is up in stock price or down in stock price. So again, let's just check it out. $94.59. Let's go ahead and add a holding here. Ticker symbol is VFV.TO, which is the Vanguard S&P 500. We'll go ahead and put it in the fractional buy that we did today at we got 0.282 of a share, and this was at a price of $88.6408. not 6508, 6408. And we'll go ahead and add that holding. Just make sure everything is good. And boom. So 94.59 down. I believe that's what the number was. We are down to $94.44. Now, just remember that. Now let's do another buy here. Oh, it disappeared. Add a holding. VFV.to. Number of shares we bought 1. And this one was at a cost of $89.29. Okay. Go ahead and add that holding. 84.44 was the number, or 94.44 was the number. Now look at us. We're at 94.01, which is a little bit off. Did I do that right? Anyways, 94.01. So you can see the change that happens when you put in these shares. And it's absolutely amazing. Dollar cost averaging from 95 was it, down to 94, or 94.59, right down to 94.01. And that's a great thing. You know, dollar cost averaging brings your average price down of all your shares. And when it goes up, you just earn a little bit more. So that's the secret to dollar cost averaging. As you can see here, 4.26% with the updated position. Yield on cost for us is 4.38%. We're at $570 of annual income, of course, divided quarterly. Now we are getting about $13.94 per quarter, or per year, divided up quarterly. Man, I'm just lost for words. And yeah, that is trackyourdividends.com. I'm probably going to update this so it's accurate next time, because we're off a little bit here. We're missing a few shares, which is interesting. Like 11.86. We're a bit high, but I think that's because it rounds up. But anyways, that's trackyourdividends.com, completely free to use. I use it just mostly to track how much we're going to be making projected for the year annually. Let's head over to ShareSite. If it loads up, that was interesting. And this one is already updated. I did that in the ahead of time, but you can see here that ShareSite, which is free for, I think, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 positions. If you have more than that, you do have to pay for the service. I do pay for the service because I actually enjoy this side of things, this program. And so this will take into capital gains into factor. It will take in dividends into factor, and currency as well. So a little bit of Forex, and it puts it all together to give you the performance of the portfolio. So with the updated positions, as you can see here, 11.8485 of a share. We have a capital gains of down 15.1%, dividends of $363.52, up 2.36%, and currency gain at 287.58, up 1.86%, which gives us a total return of down $1,679.92, down 10.88%. So we're floating around that 10%, close to 11% now, flattening out, as you can see here. And we've been flattening out for about a week now. I don't know if today is just a weird day where the markets didn't absolutely break a leg, but I have this feeling that maybe the market is starting to consolidate. And what I mean by consolidate is that it's not as volatile. And I could be wrong. I don't have a crystal ball. I can't tell the future, but it seems like everything is kind of having lower lows, or not lower lows, but less of an impact on lows, and also less impact on highs. And we're just kind of just consolidating. And that is a good thing to see. And for those that like to time the market, I truly do not believe in timing the market. Maybe this is a good opportunity. That is not financial advice. This is for entertainment purposes only, and what is my opinion and what I do when I'm building this portfolio. So yeah, we'll see what the week brings. So what else is happening this week? Well, I said I was going to talk about mortgage fraud, but I'm sure everyone knows about it. Real estate agents or realtors are providing a service to potential home buyers to fake their documents, as in like notice of assessments, T4s, to show fake income to get approved on a mortgage. And if that is showing how desperate some people are to get a home, I just don't think that's the right thing to do. That's crazy in my opinion. And to pay for a service like that, no, thank you. I'll figure it out on my own. It's much more gratifying that way. There's really no way you can BS your way out of income, because you're just hurting. You're just down the road, you're just going to be biting yourself in the butt. But yeah, big news. So I'm sure there's going to be even more regulation when it comes to people who are wanting to buy a home in Canada, as if there isn't enough regulations already, but they're there for a reason. And yeah, though that small group of people are probably messing it up for everybody else and making it even more difficult, as if it wasn't already difficult enough to get into real estate or get into buying your first home. So if you hear about more regulations coming out, you know what the root was, and it's because of people committing mortgage fraud. Not technically mortgage fraud, but fraudulent activities like presenting fake income. And so, yeah. And then what else is going on in the news? Well, Tiff Macklem has put out a statement that it's probably most likely that we'll be seeing more interest rate hikes, and it warrants it. He used the word warrant, which is quite a intimidating word in my opinion. So expect that to happen in the future here. And yeah, we're going to be in for a wild ride, as if we weren't already on a wild ride. It just keeps adding to this fire that is happening, this garbage bin fire that is going on. And we'll just continue doing what we're doing, which is investing $100 a week, of course, and continuing our journey to building a dividend portfolio, but also saving. So now's the time to probably be saving your money, investing your money, doing whatever you can to possibly create a little bit more income to make things a possibility for you. And of course, it may be difficult, and difficult is a relative word. So whatever is relative to you. So hopefully you guys have a great weekend. Thanks for watching. Don't forget to leave a like and subscribe, and we'll see you guys in the next one. Bye.